No, I was just saying that.
One piece. It's very nice.
I don't know that this guy is going to wait.
So 1% no, it's no competition. But mine, it's muscles.
Muscles, yeah.
Okay, welcome to this webinar where we will talk about reinsurance in times of COVID-19, and most importantly, we'll look back to look forward. This webinar is hosted by FSD Africa together with Senfree and the Organization of Eastern and Southern African Insurers, as well as the African Insurance Organization. Together, we have conducted extensive research over the last couple of months to find out what is the impact of this pandemic on the insurance in Africa. In parallel, we have discussed the research findings during a series of webinars, and this webinar is now the fifth opportunity for us to discuss how to deal with this pandemic. Today, we will focus on issues that the reinsurance sector is grappling with as a result of COVID-19. We will discuss underlying structural issues that contribute to the challenges that the sector is facing. And most importantly, we will look into the future and talk about how to collaborate and improve the sector together. The pandemic is exposing very stark contrasts, with starkly contrasting strengths and weaknesses of African governments, businesses, and households to handle very large risk events such as this pandemic. Insurers and reinsurers are seeing pressures on their underwriting results and on their balance sheets. And these are arising from increased claims as well as decreased investment returns. At the same time, insurers are also facing concerns and complaints by their clients, particularly businesses, over claims rejections and the perception that insurers are not fully supporting them during a major risk event. In my mind, all this prompts the question how reinsurance and insurance policies, and indeed the entire insurance system, could and maybe should improve to provide better financial protection against large risks. I think that coordination and cooperation between various public and private players is of key importance for this. This is the background for our discussion today. We have a very illustrious and highly experienced panel of a total of 5 panelists. Before we start the discussion, I would like to emphasize that we will be taking questions from the audience. You may use the Q&A function of Zoom, and we will try to answer at least some of the questions that are coming in. I can also confirm that a recording of this webinar, as well as the slides that we will show, will be available on the FSD Africa website after the webinar. So let me introduce my panelists. I'll start with Petika Ruai Martin, who is the Managing Director of NAMIBRI in Namibia, and she's also the chairperson of the Organization of Eastern and Southern African Insurers. Welcome, Patty.
Thank you, Thomas.
We have Kasim Hanta, who is the Group Head of Underwriting and Claims at Continental Reinsurance, one of the largest reinsurers in Africa. Welcome, Cass. Hi. We have Leslie Ndlovu, who is the CEO of the African Risk Capacity, based in Johannesburg, I believe. Hi, Leslie. We have Rian Botis, who is the Chief Actuary at Santam Reinsurance in South Africa. Welcome.
Hi, Thomas. Thanks.
Hi. And we have Mario Wilhelm, who is the Head of Middle East and Africa for Public Sector Solutions at Swiss Re, based in Zurich.
Hi, everyone.
Hi, Mario. So before we start, I would like to invite our two partners, OSI and AIO, to make a few remarks on the topic of this webinar. We start with Lynette Macharia, who is the Secretary General and CEO of OSI.
Thank you, Thomas, for that introduction and for setting the pace. That helps a lot in making my remarks very brief. Hello, everyone. I hope you're all keeping well. Thank you for participating in today's webinar, of course. My name is Lynette, as Thomas has mentioned. I'm the Secretary General at the Organization of Eastern and Southern Africa Insurers. So today's session is the last in a series of webinars OSI is getting involved in partnership with FSB Africa and Senfree. And in case you missed the previous webinars, the discussion started at the back end of a survey that we conducted on the effects of COVID on the insurance sector in the sub-Saharan Africa. So far, together, we have reached over 500 participants. We have tackled topics such as digitization, sustainability, insurtechs, and we've also seen key challenges and opportunities that are arising from this pandemic. So today's topic on reinsurance, I am particularly excited to hear some practical experience on how reinsurance agreements are likely to have impacted insurers' flexibility to deliver on their promises to their clients. So, and what can we learn from this experience so far? So on behalf of OSI, I would like to sincerely thank all the panelists for making time to be here with us today. Allow me to recognize the presence of the chairperson of OSI, Ms. Patty, who is a panelist today, and not just as a representation of the African reinsurance sector, but as the support behind all the initiatives that OSI has been involved in during this period. So I hope we can continue to engage more in the coming days for the advancement of our sector. We have a planned one-day extraordinary OSI virtual conference in the 3rd week of October, and we would love to see all of you there, just to wrap up this exceptional year and catch up on with other industry players just before the busy renewal season. So thank you very much. I think at this point, I will hand over back to Thomas.
Thank you, Lynette. And then let me hand over to Jean-Baptiste and to Kamazina, who's the Secretary General of the African Insurance Organization.
Yes, thank you, Thomas. Ladies and gentlemen, I would like to begin by thanking the organizers of this webinar for this great initiative and for inviting us to be part of it. I thank you all for making this webinar to happen. Allow me also to recognize the presence of Patty, who is a member of our executive committee, the executive committee of the African Insurance Organization. So now, speaking at an event hosted by Massachusetts Medical Society and the New England Journal of Medicine, on 27th April 27th, 2018, Bill Gates said he believed, quote, "The world needs to prepare for pandemics in the same serious way it prepares for war." Despite the numerous warnings from various sources about a pandemic being a realistic scenario, governments were unprepared for COVID-19 when it came. The insurance industry was no exception, and this was most evident in their ambiguous contract wordings, with wordings that did not specifically say if the pandemic risk was covered or not. So one question we should ask is, who is to be blamed for these ambiguous policy wordings? Because as a consequence, we have insurance companies trying to avoid paying the claims and customers requesting for payment. Another question which comes up is, to what extent has the insurance industry really been hit by the COVID-19? So in his article called Rising Above Adversity, published in Middle East Insurance Review, Africa's Managing Director and the CEO, Dr. Corneille Karekezi, believes that the impact of COVID-19 in terms of insurance losses thus far is limited. He believes, quote, the challenge of COVID-19 is less related to its immediate impact on the underwriting result, but rather on insurers' top line, meaning the investment portfolio and ultimately on operations, end of quote. This is in line with the findings presented for this webinar, which suggests that operational expenses increased by 29% for reinsurers and asset value dropped by 50%, all because of the COVID-19. So Dr. Karekezi went on further saying that, quote, in terms of investment results, equity markets in Africa have seen a dramatic increase in volatility due to COVID-19. For instance, both Nigerian and Johannesburg Stock Exchange dropped from a peak in the first half of January by a third by late March. The stock exchange in Kenya experienced a similarly steep decline from January to March, end of quote. Africa has once more shown how resilient she is, but I see this as a wake-up call for Africa. Though Africa's resilience of the health front, on the health front has been remarkable, based on data up to date, COVID-19 exposed how lacking the African insurance industry is. And one prominent example is with regards to digitalization. It is only with the outbreak of COVID-19 that many insurers started thinking of digitalization. The African Insurance Organization has put in place a new strategic plan with an overall goal being to contribute to increase insurance penetration rate in our continent and to build a more resilient insurance industry. So the IIO is currently working on the financial impact of the COVID-19 crisis on African insurers, which shall be published in October. The new question is, do we need an African insurance pandemic pool? I believe that we simply must translate all of the past and current events into an impulse and momentum to do more, starting immediately. The African insurance industry needs to wake up. I thank you all.
Thank you, Jean-Baptiste. This is a great setting for, and also to Lynette, of course, great setting for the background from these industry, background setting from these industry associations. So the Q&A function is available now. You'll find the button at the bottom. Before we get into the discussion, I want to show you 5 slides, which should be coming up on your screen now. 5 slides to highlight some key findings from the research that we have conducted together with Century, OSI, and African Insurance Organization over the last couple of months. I'm not going to go into all the details. As I said, they will be available for download later on, but I'd really like to illustrate a few key messages here, which I think are important background to our discussion. So these findings, or the survey that we conducted, was with 41 insurers and 14 reinsurers, most of them based and operating in Eastern and Southern Africa. First slide, please. Yes, next. And one more, yes. So our survey results show or illustrate how the COVID-19 pandemic is affecting business operations. we are seeing that sales have collapsed, or in fact lapses have increased for both insurers and reinsurers. Of course, this has translated into a very significant reduction in premium collections. For the reinsurance sector, I think with the renewal season only coming up now in the coming weeks and months, I think it's a bit too early to really show and know the specific impact, but I think it's likely that it will be that the trends will be similar. What we're also seeing is that claims payouts have definitely increased for reinsurers. For insurers, it's actually a bit of a mixed picture. I think it depends on which lines of business you're talking about. I think there's some difference across countries. But overall, we see a very significant impact of this pandemic on the operations, and as the further slides will show, also on the long-term, medium and long-term stability and outlook for the sector. Next slide. The impact on financial sustainability that the reinsurance and insurance sector is experiencing is really playing out across two dimensions. One is, of course, increased operational expenses as a result of having to change, in some cases, very rapidly and quite unexpectedly, the way how business is being done, how sales are being made, how claims are being processed, etc. The second dimension are balance sheet impacts, where we see a significant impact on asset values, or in fact asset valuations, and also very significant impact on liabilities, or the value of liabilities. We see that these balance sheet impacts are particularly impacting the reinsurance sector, at least going by the responses that we have from the first that we surveyed. Next slide. So this leads to the question, how concerned are the insurers and reinsurers about their financial sustainability? They are not only concerned about negative short-term impacts, which are mostly operational or resulting from operational expenses or liquidity constraints. They are also quite concerned about longer-term, medium to longer-term impacts, which are resulting from a reduction in investment income, which will only really become visible on the balance sheets and within the sector over the, I think, next year or maybe year, 1 or 2 years. Next one. We also asked the question within the survey whether COVID-19, or in fact pandemic risk, was included or excluded from the insurance and reinsurance contracts. So on the left side of the slide, you see the responses for or from the insurers, and on the right side from the reinsurers. The green figures refer to responses where an insurer or reinsurer said that pandemic risk, or in fact COVID-19, was excluded from the policies. Gray figures refer to responses where they said it is in fact included. And blue refers to responses where an insurer or reinsurer said it is neither explicitly included nor excluded. So the key message here is really that a significant proportion of insurance or reinsurance contracts did in fact neither explicitly include nor exclude pandemic risk, or at the very least it was ambiguously formulated within the policy terms. We see this in fact for, depending on the line of business, for about between 15 or 13 and 22% of all insurance or reinsurance contracts, which I think is a very significant number, given that pandemic risk is definitely something that the insurance and reinsurance industry has been preparing for. So that then, next slide, that then made us ask how insurers and reinsurers decided whether to pay out claims in case it wasn't explicitly included nor excluded in the policies. We see that for life and health policies, the majority of decisions were actually in favor of paying claims resulting from the pandemic. But for business interruption and event cancellation, so policies that were made with corporates, almost all of the decisions were to not pay out claims related to COVID-19. And I think this is actually the main background to some of the discussions and in fact legal proceedings we are seeing in at least some of the markets. Thank you. So let's get into the discussion. We have two segments to this discussion. In the first segment, we will look back. So we need to go back one slide. Looking forward is then only the next round of questions. In the looking back segment, we will focus on the impact that the pandemic is currently having and has been having over the last couple of months. The first slide I would like to ask to Cass of Continental Reinsurance. Cass, Continental Re is a Pan-African reinsurer, and you reinsure both life and non-life risks. The data that I've just shown shows that we see a significant number of policies that were at the very least ambiguous about whether COVID-19 is included or excluded. So when insurers and reinsurers had to make the decision whether to accept claims for such risks or such losses, they often did so. They often did accept them for life and health policies, but not for non-life risks such as business interruption or event cancellation. Why has this been the case?
Hello, Thomas, can you hear me?
Yes, very well.
Okay, thank you, Thomas. Why has this been the case? And of course, you're drawing the distinction that on the short-term side, more so. Well, look, I think if we cut to the brass tacks, if we go right down to why, I'll talk about the other side to what I think is the reason, and that is the policy wordings. But I think on the issue of why, because really we're dealing with the concept of accumulation here. And accumulation is a challenge that the insurance industry business models don't quite have a handle on. And so that's a very different dynamic. I happened in my career to see that play out, the concept of accumulation, and the difficulty of handling it was, and many will recall, the Y2K exercise. I think it's playing out for ourselves on the challenge today, given the huge technological developments, even now as we all work in a new world environment where we're using much more technology, would be the exposure also that has an accumulation that is not well understood, and therefore becomes difficult for insurance and reinsurance to handle, is cyber. So if we look at concepts of cyber, Y2K, and a pandemic, to my mind, we're dealing and getting into the realms of accumulation. And if we don't quite have a handle on that and understand its fair scope, this is difficult from the conventional insurance paradigm, as it were. But let's go to what I think is the other difficulty. And really, that's what it boils down to, is that I don't think it was a reluctance, an attitude by the short-term insurers to simply not wanting to look at indemnity. It was a case of having to look very carefully at the individual policies and the particular circumstances that any single policy would have related to under these circumstances. Now, I think the insurance industry is very proud of the fact that we talk of customized solutions. And what's the other word we like to use? Tailor, bespoke. And so we use these, we have these notions in our head, and so therefore things have to be looked at very uniquely and independently to assess. And so we can't make a carte blanche response that says, no, there is cover or there isn't cover. And then there are the peculiarities and nuances of the extensions and the exclusions. So in some policies, microorganisms were excluded. Then it becomes a definition from the legalese of looking very carefully at the microorganism clause and deciding whether this particular virus falls within that definition. And so that becomes our difficulty, and I think it's the nature of our industry, where we're trying to ensure. Remember, we always talk about all risk policies, and so what we got to do is we got to document what we're excluding, and this requires a fair amount of knowledge and application of words put together, strung together to make sense of the spirit of the underwriting scopes of cover that we intended to provide in the first place. And so I think we will have these difficulties, but it probably talks to making sure that our wordings are fairly concise and well understood. I hope I'm answering your question on the basis of why it was the case. I think it's a case of going now to every policy, looking very carefully at, especially I think the concerns being business interruption on the basis of this pandemic, and then deciding with fair mindset to how that policy should respond and how we should be indemnifying. So I wouldn't necessarily say it was carte blanche where there was a complete declinature with respect to the pandemic. It's on a case-by-case basis. Thanks, Thomas.
Thanks. Thank you, Cass. Let me ask a follow-up question more to Rian, actually. So Cass explained quite well, I think, why it is very difficult, or in fact, almost impossible for insurance, reinsurance industry, at least on their own, to underwrite pandemic risk. Rian, you are the chief actuary at Santam Reinsurance, and as such also have quite some insights into Santam Insurance. So the key reason that a pandemic and the subsequent losses are very difficult to model, but is very difficult to model, and so it is very, very difficult, if not impossible, to calculate an adequate premium. However, we are also seeing that, and I think the data shows that different stakeholders have very diverging interpretations of insurance coverage terms, and I think actually in some cases very different ideas of what insurance is or should be. Rian, can you give us some insight into the challenges of dealing with pandemic risk generally, and specifically how the current COVID crisis is affecting Santam?
Thanks, Thomas. I think I'll start off by highlighting maybe 3 areas where I think pandemic risk is a challenge from a modeling perspective. I think the first thing, and I'm specifically going to talk from a reinsurance perspective. The first thing is that a pandemic is a type of risk that you can't diversify geographically. Because if you think about the bread and butter business that reinsurers do, which is effectively catastrophe reinsurance in most of the cases, for accumulations from earthquake and flood and so forth, and especially if they do it on a worldwide basis, there is the benefit that they've got is that they can use geographical diversification. So what that means is that, not all the countries in a year is going to have a flood or earthquake. So the countries that's got catastrophe losses, those claims will be paid with obviously the premiums that they get from those countries, but also from using the premiums from the other countries that don't have those events in the same year. So it's the natural perils is something that is a risk that can be diversified from a geographical perspective. Now, if you think about the concept of pandemic, all countries were affected simultaneously. And so potential reinsurance claims are all going to come within 1 year from all the different territories, all the different countries. So it's, first of all, a very difficult risk to achieve geographical diversification on, which makes it difficult and challenging for reinsurers. So that's the first point I want to highlight. The second thing, if you think about the concepts of pricing risk, which is frequency, severity, the 2 components that basically drives the pricing, is specifically on the severity component. I think because once COVID-19 is, once this dust is settled, there will be quite a bit of data, I think, for reinsurers and insurance companies to quantify the risk. The challenge, I think, around the severity is that, of course, the severity is driven very much by how governments deal with the pandemic risk. So, things like lockdown, which industries are allowed to operate, to what extent are they allowed to operate, that all has got an impact on the size of the claims. And obviously, if we start, if we do the pricing and obviously doing it from a forward-looking perspective, the way governments are going to deal with pandemics will probably be different going forward. So, the data set that we've got is reflecting a certain way of dealing with the pandemic through the government actions that they've taken. So our data, I think, on the severity is maybe not, there's going to be some adjustments that you're going to have to make given the way that government's probably going to manage it going forward. So the severity is going to be a key challenge to properly quantify, because it's going to depend on how governments deal with COVID-19 claims or pandemics going forward. So that's the severity side. And then I think the last bit, which I just want to make around the pricing, is that, even if we develop very good models, given the data, the new data that we get from COVID-19, to price the risk quite accurately, it could end up being so expensive that insurers or policyholders don't want to buy it, just simply because it's too expensive. So policyholders will obviously look at what this cover costs in relation to, the price or the premium they pay for normal coverages like a fire or theft or any of those things. So we're going to have to look carefully at what the cost of covering this type of risk is going forward. Then just 3 issues around how what the challenges for Santam specifically was around the pandemic is when it started, we obviously realized that there were some exposures on some of the contingent business interruption extensions that we've given on specifically hospitality and leisure industry policies. And so we had to get legal opinion on the interpretation of that particular extension. How does the wording supposed to be responding to the claims that policyholders are making? And we actually got 3 different legal firms involved who were all specialists in terms of both insurance and reinsurance related matters on policy wordings. And the first challenge we had was that their opinions were, the one interpretation was quite narrow, meaning that the policies won't respond, and the other interpretation was quite broad, which meant that policies would have responded or should respond. So the first challenge that we had was that we got diverse legal feedback on the interpretation of a policy wording. So, we had vigorous internal debate on how we should deal with this going forward. So then we made our decision, which essentially was that it's only in cases where the business interruption is because of the infection itself, the infectious disease itself, not the lockdown, which by far has caused the most of the claims. And that's the interpretation that we took forward. So that was the first challenge we had. The second challenge that we had was that we had to make absolutely sure that our interpretation of the wording was rock solid from a legal perspective. Because if we start paying claims on the basis of not using a legal interpretation of the wording, reinsurers might see this as ex gratia payments because it falls outside of the scope of the legal interpretation of a policy. which then would have jeopardized our position to make recoveries on some of our reinsurance treaties. So it was very important that we take them along have engagement with the reinsurers, show them how we understand the interpretation of the wording. And so it's very important that, you make sure that your legal interpretation of a policy is correct. The last one I just want to mention was then, of course, we had pressure from the regulator, which is the FSCA, and the request came along that, or there was pressure on us to start settling claims in a situation where we still didn't have legal certainty around the policy wording, and even whether our reinsurance treaties would respond, given the situation. So at the end of the day, what we decided to do was to make interim payments, interim relief payments, and to help companies, specifically the hospitality and leisure industry, to stay afloat. And then, depending on the outcome of the court case that we're busy with at the moment as we speak, we will then see, that interim payment will then be a partial payment on liability. And if we win the court case, then it's sometimes contribution to the plight of companies without any repercussions for reinsurers. So those are three of the key challenges that Santam has had with the COVID-19 pandemic.
Thank you, Rian. Very, very interesting insights also in to the dynamics between insurers and reinsurers and with regulators, of course. Let's go to Mario. Mario, you work mainly with public sector clients, and I mean, a global health crisis like a pandemic has been on the cards for a very long time, and I know reinsurers have been preparing and thinking about this for a very long time. So then why has COVID-19 caused such massive financial shocks? I'm particularly intrigued that it has caused these shocks to government budgets and very large businesses, which I think at least appear to be largely overwhelmed by the financial impact. Very few of them, in fact, seem to have taken any steps to manage their exposure to the financial results or financial consequences from a pandemic. What do you think? Why is this the case?
Thomas, thank you very much for this question. And I think it was now mentioned a couple of times, even quoting Bill Gates, right? The pandemic outbreak was not a black swan event. Everyone saw it coming. So it's a white swan event in a way, which happens every 30 to 100 years. And I think the issue we have is the sheer scale of the financial impact globally. And the issue here is pandemics are systemic events. It was also just mentioned by Rian, right? Because they impact the global economy in its entirety. So global supply chains, right, are heavily impacted because it's not an isolated event. Everything is interconnected. And hence, the insurance industry cannot diversify. If you translate the impact on a country level into GDP, right, that's a couple of percentage points of national GDP, which is huge, right, and it's not easily, cannot be easily compensated. And if you translate that loss into an insurance premium, also the business would pay, that would be easily in the range of 1 to 3% of annual revenues of a company on an annual basis. And that's considered not to be affordable. So in a way, pandemic outbreak also for the corporate world is almost not insurable, also from a capacity to pay point of view. And in that sense, I believe that the large business are managing the crisis surprisingly well. It's mainly the SME business, small, medium enterprises, that are heavily impacted because their risk management is less professional. The financial capabilities are limited. So they are the ones who are heavily impacted, and also they are the ones where the government needs to step in right now to support them. So again, this liability comes back to the government. The government has now to step in where the private sector failed because it's not insurable. There's no capacity to pay, and it's a huge financial burden. So the The only concern I have looking back is, there were no efforts being made to create pandemic pools. That was also mentioned before. Maybe going forward, we might look into African pool solution for pandemic outbreaks. But right now, globally, they don't exist. And pool solutions are a great tool, a great solution, and they exist for different segments. Think about natural disasters, think about agriculture, think about terrorism. And I think that's the discussion we are going to have going forward. So Thomas, let me stop here. Right of time.
Thank you, Mario. Thank you very much. Very interesting points. I think we're going to come back to some of these later on in the discussion. Patty, let's go to you. So what have been the major impacts of COVID-19 on your companies, on Namib Re's operations? And how are you balancing these impacts with the pressures that are being put on you from the industry, or from the consumers, in fact, from the clients, and perhaps also from the regulators? And considering that Namib Re is a government owned or a reinsurer, do you think there's a difference between how a state-owned reinsurer and a commercial reinsurer does deal, or maybe should deal, with a pandemic?
Thank you so much, Thomas, for those questions. Before I start answering, I just, as chairperson of OSI, I want to thank you, especially FSD, Senfree, and OSI and AIO. Thank you so much for putting this together. And also, thank you so much for the insightful outcomes of the survey. I think it's really relevant, and it's very much exactly what we're experiencing on the ground. So all over, what one can say is yes, COVID-19 obviously is something new to all of us. We did not expect it. So, but obviously the containment and the mitigation measures that's been put in place by most governments in the whole of Africa and the rest of the world has resulted in a lot of restrictions in terms of movement of people, goods and services, and that's obviously impacting very severely on us as insurance and reinsurers industry, because we, especially as reinsurer, our business is to be out there meeting with our clients, making sure we giving them the value addition that they require. So yes, this is the impact is huge, and we definitely has been affected severely. I will just quickly go through all the different points that you have raised. Namib Re, we are, you can say, medium-sized enterprise. We are state-owned enterprise, as you have mentioned, state-owned enterprise, as you have said. However, your question regarding whether it is different for a state-owned enterprise and whether, or a private-owned enterprise, whether there's any difference in how the pandemic is impacting you, I think that's, or how we obviously responding to it. What we have found is that from my side, I would say no, because we all work on the same business principles. We are an institution that have our shareholders that we respond to. So the same as a private entity. So maybe the difference would have been just like where you would need capital injection. As an enterprise, you would go to your normal shareholder, and in our case, we will go to government, to our government, who is our shareholder. But as we are all aware that most governments are also very much been bleeding as a result of the pandemic. They have put in a lot of packages for the small enterprises, and as a result, we cannot go to them. But as an enterprise, Namib Re has been, we are operating quite effectively and efficiently, and we within well capitalized, and we are definitely addressing all the issues of the pandemic. Now, coming back to the question as to how it's impacting us, yes, what we have definitely found, and it's coming through in your survey, is the fact that obviously the first thing that came through, and I think your survey is saying 95% of most of us have to adjust to making sure that our employees can work from home. So that was the first impact that it has on us as a institution or as a corporation. So the first thing we had to put in place measures to make sure that our staff are able to work from home, to serve our clients from home. So we have also worked out methodologies, or like we have put ourselves into teams, because right at the beginning of the pandemic, in Namibia, the insurance sector has been identified or classified as an essential service provider. So we were able to still continue providing services as normal. So but in order for us to be responsive to, because we did not know what to expect, so we divided our teams, our company up in teams, so we could be responsive to the pandemic. Namibia, overall, we started very low. We only had, I think the first 100 days, we only had like less than 20 COVID cases. But the last 2 months, I think we have grown into being the top in terms of the rest of Africa, topping the list of, because I think we're also testing quite rapidly. So we're in the top 4 in terms of COVID cases registered. So we have gone from 20 cases to over 3,000, we now had 6,000 cases. So that shows you that anything can happen in a very short space of time. So in terms of our consumers, our industry, yes, I must say what I've picked up, what is coming through within the Namibian market, we are our financial sector market, which include insurance, is very resilient and very well-established market. Although we're a small population, in terms of penetration, we're second to South Africa. So we a very big, we make out quite a big portion of our GDP and our contribution to obviously to the economy. But we are definitely feeling it in terms of, obviously there's job losses, especially in the tourism sector. Namibia is very huge on tourism, but as a result of the COVID-19, we have closed our borders, but we opened on the 1st of September, only for tourists to come in. So obviously to try and revive the business, but our industry is feeling it. Our customers on the insurance, obviously on the insurance side, the insurance sector is showing some lapses, especially on the life side, and then on the commercial side, I think we have, it's a bit more resistant, more resilient. On the regulator side, can proudly say that our regulator has actually, right in the beginning of when all of this was happening, they came out very strongly, and they were contacting all of us in the industry, talking to us, asking us how we're doing, how we're coping. So which was quite a good initiative on their side. And after they have talked to most of the industry members, they have put in measures in place, or like they have put in like a relief mechanism. They have put suggestions that the industry can put up for the sector, like premium holidays, extension of policies that were lapsing, discounts on motor premium during lockdown, because obviously you're not driving. So, so they were really inventing discounts on household contents, and because obviously there's a reduction in break-ins, and many other initiatives were being brought by our regulator. However, industry, they obviously put it out to industry. Industry then responded positively to it. But each insurance company respond differently to these measures. But most of them are actually, what I have picked up throughout this few months, is that the industry has become very, very innovative and very disruptive. Like all those things that were we were told that you have to implement, they were taking their own time. But like I've just, like yesterday, I've seen they already doing the e-signature where they're sending you, where you can make adjustments to your insurance policy by just doing e-signature on your computer and send it back to them. So that's, for me, big changes that are happening and very positive. And I think going forward, and I think we'll discuss it later, but it will obviously be cost effective. But for now, it's obviously, there's a lot of operational costs for the insurance sector to adjust to these disruptions or these new changes that we have to make. Yeah.
Thank you, Patty. Very informative. Let's move to the next segment of this webinar, which is really about looking forward. So looking forward into a future where hopefully the insurance and reinsurance sector is better prepared for dealing with the next very large risk event, whether it's a pandemic or a natural disaster or cyber, I don't know. But I would like us to also consider that it's not only about the sector being better prepared, but also our governments, the societies, the countries in Africa, the governments in Africa, the businesses and the households in Africa. A key aspect which I think is coming out from the discussion so far is that the system of risk transfer for these kind of risks should not, and in fact cannot, rely only on traditional or maybe plain vanilla insurance and reinsurance arrangements. Instead, we need to consider new types of risk transfer instruments that are provided by the financial markets and that public and private stakeholders develop and manage jointly. I would like to ask the first question to Leslie. Leslie, you are leading the insurance arm of the African Risk Capacity, which ensures sovereigns, so governments effectively in Africa against losses and liabilities resulting from extreme weather events, natural disasters, and so on. So in that sense, ARC fills a gap that is not typically served by private insurers and reinsurers. I think you have recently also worked on risk transfer for virus outbreaks and pandemics. What options and opportunities do you think are there to learn from the current crisis and to adapt the system of risk transfer?
So thank you, Thomas. When I listen to what my fellow panelists have been talking about, what makes pandemics unique is, as has already been said, the accumulation risk, the lack of robust pricing data. And it's quite clear to me that we need a public and private sector solution in order to be able to deal with this. When you look at how other major risks have been dealt with in the past, such as flooding in the UK through Flood Re, terrorism through Pool Re, and in the case of the US through the Treasury backstop. So then going forward, I see a similar solution that could be put in place in Africa, just like we have done at African Risk Capacity for drought, tropical cyclone, and flooding. In fact, before COVID-19 hit, we were in the process of launching outbreaks and epidemics product that would have covered Marburg, Lassa fever, Ebola, and meningitis. And now we are thinking about incorporating COVID-19 into the coverage. I think it's important to just point out that in our case, what we are ensuring is the cost of government response. We're not ensuring the full economic cost of a pandemic. So then this really puts a cap on how much exposure we have, which is perhaps why we are able to move much quicker than the industry. In some instances, I think when you look at the case studies, there was an outbreak of Ebola in 2015 in Guinea, and the government initially needed $5 to $10 million to be able to respond to the outbreak. But because they were unable to raise the money in time, this outbreak ultimately cost over $1 billion because it spread to other countries as well. So then for us as a parametric insurer, we're targeting government response and getting money into the government's hands as quickly as possible. Specifically to comment on the COVID-19 product, which I alluded to earlier, the reason why we haven't moved ahead is because COVID-19 is still ongoing and information is still coming to the fore in terms of what the virus really means from an exposure standpoint. However, we have developed a tool together with the African Center for Disease Control, which allows governments to understand the exposure that they have to COVID, identify the hotspots, and then also do simulations about how the virus could spread. So even though our product is not ready for the market, the tools that we have developed in anticipation of the launch are already proving to be very helpful to governments. And again, this highlights that the value of insurance is not just in the payout of claims, but also helping clients, cedents, and anyone else just understand the models and the exposure that they have, and ultimately take appropriate mitigation actions. So I know I've thrown out quite a number of ideas, so I will stop here and I'll let my fellow panelists chime in.
Leslie, thank you very much. This is very exciting. Let me bring this then to Mario. Mario, you're dealing with the public sector, and there is a strong recognition that public-private partnerships are needed to achieve reliable financial protection. However, making these PPPs a reality is very often very hard and very long work, and very often, in fact, political and commercial interests and principles are quite difficult to reconcile. So what do you think, based on your, what do you think are tangible steps that can be taken towards better public-private collaboration in Africa for regional or global health crises like this pandemic? And what are the innovative approaches and instruments you are seeing emerging during in the current discussion about this pandemic?
Yeah, thank you very much, Thomas. I mean, it's quite clear, and that's also coming out of this conversation, right, that public-private partnerships are key to fight now the economic impact of the pandemic outbreak. But I think it's equally important, to think about a holistic view on risk. So how can you actually prevent and anticipate these kind of risks? And then we come to the topic, it's not only pandemic risk, we have also other risk protection gaps on the African continent, be it on the drought side, agriculture, flood risk, tropical cyclones. So there are many, many risks which cannot be handled by the private sector alone. So we need these collaborations. And if you look into the big corporates, of this world, you always have this function, even on an executive level, which is the function of a chief risk officer. So there's always a unit dedicated to risk, and it's a unit we usually don't see on the level of the governments, right? There's no country risk officer, and this is exactly the concept we are advocating, right? We are advocating that also the public sector tries to take a scientific and data-driven approach towards identifying risks, quantifying risks, managing risks, and also transferring risks. I think once this baseline is established in the public sector, right, we can also have a more robust discussion on risk transfer, on insurance, how to best use insurance as part of your risk financing toolbox. And I think that will elevate also the public sector to the next level. So that's, I think, a very concrete concept, which is already being taken by many cities around the world. So the initiatives to also establish these city resilience offices, Cape Town has one, and I think that that's the way to go, right? Now, if you look into very concrete examples, what's currently happening, we don't have to look far. So with Leslie, we have the CEO of ARC on the panel, which is great, and he shared, the great work ARC is doing. That's exactly what we need, right? Direct engagement between the insurance industry and the public sector to make it happen. And there are also Other interesting examples, you can take the Kenya Livestock Insurance Program, for example, which is quite a success, which is also collaboration between different ministries in Kenya and the insurance industry. So there's a long list. I won't go into all of them, but I think if you link that back to COVID, the situation is quite clear, right? Right now, it's too late to act to prepare for COVID. We're in the midst of the crisis. COVID has made many companies, many national economies more vulnerable to any kind of risks. And that's, I think, where we have to focus on, right? We have to prepare actually for the crisis. So after the crisis, before the crisis. And one example I want to give before I start is the flower industry in Africa, right? Which I think is a nice representation of a global value chain where flowers are locally produced, they're exported. Main markets are in Europe, and now with COVID, these markets broke completely down. So the farmers in Africa, some of them smallholders, are left vulnerable now because of COVID. Think about the next event that could happen, the big next drought event in East Africa. They could actually hit them twice in a year. And that's where we need to focus on, right? So the question is, how can we improve the resiliency of the different value chains of citizens, of corporates, and also the government? So I stop here. Back to you, Thomas.
Yeah, thank you, Mario. Very interesting, and probably worth a whole dedicated webinar to talk about initiatives and steps towards that. I want to circle back, Cass, the next question is for you. I want to circle back to how the industry is dealing with some of the challenges in servicing their clients at the moment. So we have heard that there's that the insurance industry and of course the reinsurance industry is facing significant criticism from some customers, particularly regarding claims acceptance for business or corporate insurance, business interruption, event cancellation, and so on. I sometimes have the impression that this criticism and the underlying issues will trust and to some extent relevance of insurance for its customers. What do you think? How can insurers and reinsurers work towards rebuilding or maintaining trust and relevance?
Yeah, that's the important words you're using there, Thomas. And I'm glad you actually you're raising that. I think the relevance is there, but the key one for me, almost as well at the personal level, is trust. And I'd like to say, because I'm glad to see Jean and Patty there from the associations. And I think there's a lot of work looking forward now. There's a lot of work for us on making sure from the association side, all members get to focus on how it is we're going to advance our cause and regain the trust. We know that the insurance industry has always been frowned upon. And we know that for ourselves, it's nothing new. And what we've probably done with this pandemic is hurt ourselves a little bit more. And so we've gone and eroded our trust factor even more so. So I think there's a lot of work for us that has to be done, Thomas, going forward. But how do we regain that? Because you see, this trust factor, why I'm emphasizing it for me personally, it's so important because when we look at our next challenge, which is climate change, and we've got Mario on the line, where we require public-private partnerships to be forged. How do you even start that when you don't have the factor of trust fairly well established? Where do we stand as insurers and reinsurers when we enter the marketplace trying to convince others about the challenges of climate change and what needs to be done, and that where we need to be reflecting upon our social presence and the need for us to be dealing with these matters of sustainability as well? when the people will be looking at us far and wide, at our voices, and viewing us with very little trust. So I think what you're saying here is very important, and the industry needs to be fairly conscious about this important characteristic. And so how do we do that? What are the things then? And clearly we've got these concepts here in South Africa. We have treating customers fairly concepts, but it comes down to essentially the wording and the offer that we make, and how that offer is understood by the marketplace. Because clearly we had all notions of in fairly a number of policies where the cover wasn't provided, but that wasn't fairly well appreciated. And you find that a lot of the times on many numerous other incidents where you have a claim, the insured has a claim, and then they come knocking on the door, and only to find that there's a fine print item that is going to cause them not to secure indemnity. This is very frustrating. And it's a reflection then that we haven't sold ourselves correctly. And then further the erosion of trust. So what is going on? And the new technologies that avail themselves, whatever it is we're doing, I think we need to consciously start looking at that. And that's why I think we need to take the pandemic as the cornerstone of rebuilding once again, where we try and improve the relationships we have with our clients and customers. So, for me, I think we either lose this opportunity, but many a times in history, when you've had catastrophic events, whether it's a world war, whether it's a pandemic like this, I think it's important for us to reflect and then to use the occasion to move ourselves forward. But there's a lot of work to be done, Thomas. I hope that answers the question in part.
Yes. Rian, so yeah, I mean, it's clear business interruption policies and in fact, any type of insurance policy cannot just cover a pandemic or so, or in fact, a government imposed lockdown. But thinking about relevance and trust, what types of products do you think could help businesses and individuals during large crises? And I'm not only thinking about pandemics here, but also climate change that Cass mentioned and others.
Yeah, Thomas, I think, for insurance companies to be able to provide products for these large systemic risks, the very first building block that has to be in place is reinsurance, or a mechanism to transfer the risk and spread the risk. Because without that, you can design the best policies, but as we said before, the accumulation that goes with that is just too big for any insurance company or even a market to be able to deal with that, with the amount of claims and the size of claims that come through. So I want to phrase my answer by looking at maybe some thoughts around reinsurance. And there's two parts to it where I think, from my perspective, there is a possible solution. The first one would be to look at government type solutions. So the one that springs to mind is in South Africa, we've got Sasria, which is an insurance company owned by the government that basically pays for damage as a result of terrorist acts, strikes and riots. And it came about after the Soweto riots in 1976. And if I think about our current situation, it's pretty much the same kind of thing, in a sense that we sit with the risk here that most insurance companies probably won't or want to insure going forward, just because of the accumulation risk. And so you need the government or some kind of government organization to assist with taking on the risk. And I think so SASRIA could work in a sense that what we need to do is just make sure that we've got the systemic risk properly defined. And where I think it will also work if it's a type of risk where the government does have control over the severity of the losses. Because, you know, if you think about the COVID-19 losses, especially business interruption, is because of the lockdown, which was imposed by the government to be able to prevent the spread of risk. So if you think about systemic risks where the government has got a big part to play in terms of managing the risk, then I think that could be well suited in that domain to provide insurance companies with coverage. So the idea would be the insurance company would sell the product and it would buy reinsurance from a government entity. That's one foot. The other foot would be, and I think Mario has alluded to it, is the pooling mechanism. So, you know, here we insurance companies must be able to buy the coverage from a large international pool, you know, a slug of reinsurance capacity. The pool is then basically underwritten by most of the largest reinsurers in the world. And the more reinsurers you can get in that pool to take the risk on, with obviously the correct rating, you know, the more cost effective such a mechanism will become. So in my view, those are the two kind of solutions that we need from a reinsurance perspective. In terms of the products itself, I think, you know, once the reinsurance is in place, you know, there's all sorts of innovative ways you can structure products to you know, specifically deal with the needs of policyholders around systemic risks.
Great, thank you, Rian. Also very interesting. So it seems we're running over a little bit. I think actually we'll conclude in the next 10 minutes. I know that Mario will have to leave at some point. So if you see him disappear, it's not because he doesn't like us anymore. Next question is to Patty. Patty, what do you think? How will your business and perhaps that of other reinsurers, how will it change very specifically or very tangibly, yeah, as a result of the pandemic? You've already talked about the need to change your processes and working remote, etc. But I think there are some longer term aspects also regarding how you structure your business, how you go about the business of reinsurance, and writing these policies and so on. So what practical steps do you think are needed by insurers and reinsurers, especially in Southern and Eastern Africa in the coming months, to ensure that they remain able to deal with risks, and especially with large risks like this? Patty, you're on mute. Sorry, you need to unmute.
Okay. I'm saying I tend to agree with what Kas said, that specifically on it's very important and very good for us to have the AIO on board here as well as OSI, because I was saying as African reinsurers we will have to collaborate and definitely come together in looking at finding solutions that will work, whether it's pulling together as insurance, having, like I think the previous speakers have gone into the detail of putting up, making sure that if something like this happen again, that we are ready. Because I think we did not, I think Rian has also elaborated quite well on them, that in South Africa we've got SASRIA, in Namibia we've got NASRIA, and I can actually proudly say that NASRIA has actually started to step up to the table. They have already started to engage with government and also with our some of our private sectors, or like state-owned enterprises like the Development Bank, where they're putting up some structures in order to obviously revive the economy as well, and making sure they put up packages for especially the smaller enterprises, to make sure that they give them the necessary guarantees for them to set up again and come out of the pandemic. So for us, we would say COVID-19 has obviously resulted in significant digitization. So going forward as Namibia, and I think many other reinsurers, we will have to start looking at operating models and consider obviously the entire value chain with regard to our underwriting, our sales, our claims processing, premium collections. I think we will never be the same again. And what I have seen from our staff, many of them, some are enjoying working from home, others are preferring working still be in the environment of coming to work. So it could be in the future that you will get people working for 2 days and others working for 3 days. So I'm sure the new normal will never be the same. So as a progressive institution or corporation, we will all have to look at what is most beneficial for us as enterprises to serve our clients. I think we will also have to strongly lobby our regulators to revise the laws, because to obviously speak to the fourth industrial revolution that is obviously right in front of our doorstep, because many of our laws do not allow us to do certain things. And I think that's also coming out in the survey that has been done. I think another important aspect that will have to come through from us as a reinsurers and insurers is to look at tailoring insurance offerings to the needs of our customers, as opposed to having standardized offerings. As we all know, different customers need different needs. Different customers require different, we will have to change and adjust to, especially if we go into like, Cas have referred to the climate change. And I think we're looking specifically as Namibia, we're looking at products specific as to the need of Namibia, which is specifically looking into the food security of our country. So if we go into those type of products, one has to look at specific insurance products that will serve the type of the need of our Namibian market. So this is also obviously effectively changes the focus from just be price centricity to more value centricity in terms of how we're serving our customers. So additionally to that, as reinsurers, we have already started to look, especially on the blockchain. I can here give the credit to the CEO, the MD of Africa Re, where he has gotten most of us as Africa reinsurers together to start looking into blockchains and how we can come together as Africa reinsurers and see obviously how we can together find solutions that will obviously serve our markets. And I think that is definitely in the type of interventions that we'll have to start doing. And most of us as Africa reinsurers has already start meeting up. We've got an association where we are meeting. It's just unfortunate we couldn't take it to the next level. This year was really most probably the year we would have started doing some implementation work on it, and specifically this will impact on how we will do claims going forward, how we will do underwriting, how we will obviously even interact when it comes to the renewal season. So yeah, so I'm sure the impact of COVID-19 will definitely result in many changes as to the way we do business and how we will address our customers' needs.
Thank you, Patty. Great. So regarding Q&A, so in the interest of time, I'm not going to actually take a question for the panelists right now, but I know, and I hope you've all seen it, that panelists actually have been responding in writing to some of the questions that came up in the Q&A. If you still think there's a question you really want to ask one panelist, then please send me an email, thomas@FSD Africa, and I will forward it to the respective panelists or one panelist. Yeah, we just need to keep the time here a little bit. So I would like, as a closure to this webinar, for each of the panelists, So if we come back together in this group in, let's say, 6 months or 9 months from now, what is the one thing that should have happened in the industry, either by you or that you would have liked to see in the industry, to make the industry better prepared for a large risk event like this? And I'm going to give the word to each of you, and I just need a very short statement. I will note it down, and then maybe we come back together in 6 months, 9 months or so. I start with Rian, please.
Yeah, Thomas, I think from a reinsurance perspective, what I'd like to see, you know, as a buyer and potentially also writing reinsurance, is that the larger reinsurers in the world actually get together and collaborate and put together a cost-effective pooling mechanism together. You know, because I think the worst thing would be is if each one of them go and try and design their own solution. I think if there's a collaborative approach between the biggest reinsurers in the world, then I think there will be a more cost-effective solutions, which, you know, if you think about this pandemic and the huge cost potentially involved in that, you know, if there's a pooling mechanism that involves the biggest reinsurers in the world, I think there has to be some cost efficiency in that for buyers of reinsurance. So I want to see the biggest reinsurers in the world come up with a cost-effective pooling mechanism that looks at these systemic risks. And I think let's start with pandemic. And if that's successful, it can be expanded to other types of risks.
Great. Thank you very much. Leslie, what's the next step?
So for me, it's contract certainty, and I'll just leave it at that.
Okay, great. Thank you very much. Cass.
Yeah, I think just to tie up my 2 points, it's a case of the industry really taking up the challenge on understanding exposures that are defined as ones that accumulate fairly broadly, and then to be very clever with the way in which they present the offer to the market, where it's fairly clear and succinct. Just by the way, quickly, if I may mention, because I'm on the engineering side, is my specialty. I was thinking, because I had to do a presentation earlier this morning, and on machinery breakdown, if I said to the insureds that when your fridge breaks down, I'd cover you for the deterioration of stock of your goods in your fridge. And that's on the basis, and that's all I'm saying to you. But now what happens is, in the South African context, we have load shedding. So there's no breakdown of the fridge, but there's load shedding. And then if we take that further from a pandemic analogy, and we have a complete blackout, countrywide, blackout completely right through. The question that the insureds want to come back with, if the analogy holds, and if the members attending this particular webinar will forgive me, I'm really trying to push the analogy. But if the analogy holds, then am I now responsible for the payment of all goods that have deteriorated in the refrigerations of homes all around that I've insured, whereas my operative clause or my intention right at the outset was on the basis that there was breakdown of your refrigeration plant. So you see, it's these concepts, to my mind, which we need to apply our minds to, where we found ourselves wanting on cover, unwittingly, and then to think up all these peculiarities and make sure that our wordings then embrace them and are fairly represented to the insured at the end of the day. Sorry, Thomas, it was maybe a bit long.
Thank you, Cass. So yeah, I think he also, it responds to what was mentioned earlier, knowing how governments deal with a large risk event and how they affect the size of the losses. Patty, the last word is to you. What's the next step?
Okay, I think most has been said, but I'll just quickly repeat. The first one is enhance efficiency through accelerated digitization, identification of new products, product opportunities and innovation around large risks like pandemics and climate risk. Some of us are very passionate about the climate because I think we're saying that's where insurance, we as insurers, we need to put more of our time there. So the next one that I have is that there's certain risk have become front of mind for customers, for consumers. So this is an opportunity for insurers to leverage the greater risk appreciation of individuals and develop products that speak to the current needs, more tailored insurance offerings. Reinsurance can assist insurance companies in research and development of these products. Being a sole reinsurer in Namibia, Namibia should drive, or we are definitely looking at efforts to try and encourage the insurance industry to provide private market solutions to the pandemic protection gap threatening our economy recovery. So we are looking at those ones. And then the last one that I have is the insurance industry can prepare for the next crisis by establishing an insurance pool specifically for pandemics to enable pandemic insurance products to be offered by the insurance market. This I foresee, obviously, we also have to look at public partnerships together with government. I think the UK has already started with this initiative.
Thank you, Patty. All right, and with this, we're coming to an end of this, to the end of this webinar. We have talked and referred to some of the research that we have carried out between FSD Africa, Senfree, OSI, and AIO. There should be a slide on your screen. There's 3 reports we have published in the last couple of weeks. You all find them on the FSD Africa website, fsdafrica.org, or if you scan that QR code, which is on your screen right now. I thank all the panelists for making time for this webinar and for giving such great insights into your work and into the sector. Thank you very much for that. Leslie has dropped off as well, and so I have to apologize for running over on the time of this webinar for a little bit. I think we raised some very, very pertinent points, and as FSD Africa, I'd be very keen to continue this discussion in one way or the other. But for today, thank you very much. Everyone have a good afternoon, and I hope to see you soon. Bye-bye.
Bye-bye.
Thank you. Thank you so much.
Everyone.
Thank you, bye.
Bye.